Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of August 5th to August 9th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of intense global economic scrutiny and anticipation. As we await the preliminary GDP print for the Eurozone's second quarter, central banks, including the Bank of Japan and the Bank of England, prepare for crucial policy meetings. Investors are keenly observing these developments, with potential rate adjustments and bond purchasing strategies set to shape economic trajectories. With varied economic signals from major economies, the landscape for policymakers and investors alike is rife with uncertainty and opportunity. Following decisions by the BOJ, Fed, and BOE, attention turns to the RBA, which announces its decision on Tuesday. The RBA kept its benchmark rate at 4.35% in its latest meeting, debating a 5 BPS hike due to slower than expected inflation easing. May CPI rose to 4.00% YoY, raising expectations for a hike by year's end. However, Q2 data showed a rise in headline inflation to 3.8% YoY, but underlying metrics eased. Concerns over China's economy led investors to shift expectations, now fully priced in a 5 BPS cut by December. On Thursday, the BOJ will release the summary of opinions from its recent meeting, where it raised interest rates by 15 BPS, exceeding market expectations of a 10 BPS move. Officials also agreed to gradually taper monthly bond purchases to 3 trillion yen by April 2026. This decision has bolstered the yen, driven by a risk-off environment and unwinding of carry trades. If the summary reveals a willingness to hike rates further before year-end, the yen could maintain its upward momentum despite the recent rally. The Fed kept interest rates steady this week, with Chair Powell hinting at a potential rate cut in September. Progress towards the inflation target has led market participants to anticipate up to 3/4 point cuts by December. Next Monday, dollar traders will focus on the ISM non-manufacturing PMI for July for insights into the U.S. economy. The prices charged to Bindex will be closely watched for signs of continued inflation decline, while the employment index will be monitored due to recent labor market softness. Next week, employment data from New Zealand and Canada will draw significant attention. New Zealand's report, due Wednesday, follows the RBNZ's dovish shift in July and a drop in Q2 inflation to 3.3% YoY. Investors now anticipate over 2/4 point rate cuts this year, with a 35% chance of the first in August. A rise in the unemployment rate for the 5th consecutive quarter could heighten these expectations, further pressuring the Kiwi. Canada's jobs data will be released on Friday, rounding off the week. Market participants will scrutinize these figures for further economic insights and potential impacts on policy decisions. This week has been marked by significant economic developments worldwide. From the Eurozone's GDP figures influencing the ECB strategies to the BOJ's cautious policy approach and the BOE's rate-cutting deliberations, the global economic environment remains dynamic and challenging as central banks navigate these complex waters. Stay informed as we continue to monitor their decisions and the ensuing impacts on markets and investor strategies moving forward. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.